Here's a tip that you should note when you get question on subsidiary book in the examination. If the question is on purchase book or sales book, remember not to include cash transactions or asset related transactions in purchase or sales book. And if the transaction is relating to purchase return or sales return books, then remember only purchase or sales return of goods will be entered. If it is relating to any other allowance or wrong charge of invoice, it need not be written. So remember, not all the transactions will appear in subsidiary books. See you in the next one. Till then, stay tuned.
Here's a tip on how to solve questions on rectification of errors. If it is one-sided error, remember there would be only adjustment for errors identified before trial balance. For errors identified after trial balance, you will have journal entry with suspense. For two-sided errors, in all the three stages, you will have journal entry. For errors identified after final accounts, you would have to replace accounts affecting profit and loss with profit and loss adjustment account. Also remember that at the end of the problem in stage 3, we need to close our P&L adjustment account by transferring the balance to capital. If in case it's mentioned in the question that the difference in trial balance is not transferred to suspense but wrongly transferred to P&L, then close your suspense account also like P&L adjustment account by transferring the suspense balance to capital account. I hope this helps. See you all in the next one. Till then, stay in the game.
Here's a tip on how to solve questions on bank reconciliation statement. You don't have to draw two different amount columns, one inner and one outer. You can write all of them in one column. And you don't even have to segregate the items as add and less separately. Write all the items in the order of the question. And don't ever start with balances per passbook unless you have only balances per passbook in the question. Remember, you will prepare amended cash book only when it is asked in the question. And what appears in the amended cash book is errors as per cash value. See you all in the next one. Till then, stay in the game.
Here's a tip on how to address stock reconciliation based problems from valuation of inventories in the examination. Questions can be either for computation of book inventory or physical inventory. Starting with book inventory. Remember that all that we are caring about is the goods that we own and not goods that we possess. Question can be either forward or backward. When the date of physical verification is before the year end, it's a forward problem. If the date of physical verification is after year end, it's a backward problem. For a forward problem, we add inflow of goods and deduct outflow of goods. For a backward problem, we add back outflows and deduct inflows. And if in case the question is on computation of physical inventory, which is very rare, then remember what matters is the actual possession of the goods and not the ownership. I hope this helps. See you all in the next one. Till then, stay with me.
Here's a tip on depreciation accounting. When you're doing the ledger in the examination, prepare working note before the ledger. And let this working note involve a separate column for each part of the asset. Irrespective of the fact whether it is sold or continue to be held, prepare a detailed working note, because when you start with the ledger, you need to only think of accounting and not working note. And you might think that you might save a little time by starting with ledger straight. In the quest of 5 minutes savior, don't write to challenge your 6 months. And when they ask you to prepare provision-based accounting, keep the asset at original cost and transfer all the depreciation to provision account. When the asset is being sold, close that provision by transferring to asset. If in case they're asking you to prepare disposal accounting, transfer that provision of the asset sold to disposal along with the original cost to disposal. Write the sale consideration in the disposal account and you will get the profit there. See you all in the next one. Till then, stay in the game.
When solving problem on final accounts in the examination, don't try to finish manufacturing account first, then do trading, then start with P&L and finally do balance sheet. By doing this, you might end up reading the question 2 or in fact more times. Try and keep all the accounts open, read the question and then post it wherever it belongs. By doing this, you won't just finish the problem earlier, the probability of you finishing the problem with a tallied balance sheet will be abundant. See you all in the next one. Till then, stay in the game.
Here's a tip you must know on the chapter of bills of exchange. Please do this chapter before doing average due date and account current. And in the chapter when you're computing due date, remember due date and maturity date need not be same, but it can be same. The distance between due date and maturity date of 3 grace days will come only when it is bill with specific period. If it is for credit period or bill with specific date, then there won't be concept of 3 grace days. And if in case the maturity date falls on holiday, you have the intention of taking the day before or after only if it is on holiday. Now what holidays to consider? There are 5 known holidays: Independence Day, Republic Day, all Sundays, 1st of April and 30th of September. These are known holidays on which if there is maturity date, take the day before. If not, and if it is an unknown holiday, take the day after. Remember that all the unknown holidays will be given in the question and you don't have to assume the same. See you all in the next one. Till then, stay in the game.
This tip is on your favorite topic of joint life policy in partnership. With regard to joint life policy, remember that policy is taken on lives of all the partners together by the firm. So the premium paid is expense, and if it is debited to P&L account by the firm, all the partners are bearing that expense. So the policy money or the surrender value received will be shared between all the partners and not just the deceased or retiring partner in profit sharing ratio. However, the firm can alternatively treat this premium as asset on the balance sheet, and if they've treated as asset on the balance sheet at surrender value, then the policy money or the surrender value received will be compared with that surrender value. Only the excess amount is profit, and such excess is shared between partners in profit sharing ratio. If in case the firm has maintained JLP reserve, treat it like any other reserve and share it to partners. See you all in the next one. Till then, stay in the game.
Here's a tip you should note on solving questions from not-for-profit organizations. Remember, the subject name is accounts and not statement ends. So don't prepare a statement to compute expense or income. Prepare an account with opening balance on the debit or credit side and then the closing balance on the debit or credit side. Write the expense paid or expense for the year. Find out. Prepaid expenses are assets with opening balance on debit and closing balance on credit. Outstanding expenses are liability with opening balance on credit and closing balance on debit. Pre-received incomes are liability with opening balance on credit and closing balance on debit. Accrued incomes are asset with opening balance on asset side, that is debit side, and closing balance on credit side. And when you're solving questions, whenever there is an item, remember that receipt should be equal to income and expense should be equal to payment. If not, there would be opening or closing balance should appear in the calculation. For every item with adjustment or with opening closing balance, prepare a ledger, close the balances and prepare your balance sheet. It would tally. See you all in the next one. Till then, stay tuned.